Welcome to today's Explainer. Today, we're diving into the cryptocurrency market as of July 19th, 2026. But look, we aren't just going to stare at boring charts and numbers today. I want you to picture this market as a high-stakes, vibrant enemy battleground, where colossal financial forces are just colliding in real time. It's been a period of intense volatility, and right now, the dust is sort of settling into what analysts are calling a measured recovery. But beneath the surface, a massive turf war is being waged by absolute market titans. 24. It's a jarring number to start with, isn't it? On the Crypto Fear and Greed Index, a 24 means we're sitting firmly in extreme fear. Retail traders are absolutely terrified right now. The broader market sentiment is battered, bruised, and highly defensive. And honestly, this single number sets up the central mystery of our explainer today, because when you see what's actually happening out there on the battlefield, the underlying data tells a completely different story. Section 1. The Fear and Price Paradox. Okay, let's dive into this. We have a market completely gripped by extreme fear, yet Bitcoin is showing this really surprising resilience, basically mounting a tactical advance. As of our data cut today, Bitcoin is trading up 1.35% over the last 24 hours, sitting around $64,824. It's a total paradox. You'd expect a market this fearful to be bleeding out, right? But instead, Bitcoin is holding its ground. And out in the derivatives market, we just witnessed a brutal counterattack. A staggering 96.9% of recent liquidations were short positions. That totals roughly $10.40 million. So bearish traders who bet on the market collapsing further were suddenly caught in this massive squeeze, completely forced to urgently cover their positions. And this dynamic acts like rocket fuel, creating a self-reinforcing upward momentum right in the middle of all this fear. But our protagonist is still trapped in a very tight arena during this consolidation phase. As you can see, we have a strong support zone forming around $63,800, which is catching any immediate downside. Our current price is wedged right in the middle, but towering overhead is a massive resistance wall between $65,000 and $65,500. Bitcoin briefly tested this level earlier in the week and got pushed right back down. So until we can smash through that $65,500 barrier on high volume, we're kind of stuck in this base building phase. Section 2. Awakening the Crypto Whales. The smart money is making its move. Just absorb the sheer scale of this number, 270,000 Bitcoin. According to on-chain data, this is exactly how much sophisticated whale wallets have aggressively accumulated over just the past 2 weeks. So while the retail traders were panicking during the recent volatility, these massive entities were silently vacuuming up supply. To put a dollar value on that, we're talking about a $16.7 billion strategic maneuver. This isn't just casual day trading. This signals deep, long-term conviction from sophisticated participants. By pulling this much supply off the board, these whales are basically constructing a powerful $16.7 billion defensive shield under the current price, severely tightening the available supply for when demand actually surges. Section 3. Institutions enter the arena. The heavy artillery of traditional finance is officially returning, and it's time to introduce the mecha corporations. Fire off this number, $368 million. That is the net inflow into U.S. spot Bitcoin ETFs over a rapid 3-day trading window from July 16th to the 18th. This charge is being heavily led by BlackRock's IBIT, and this is incredibly significant because it abruptly reverses a very painful $424 million outflow streak that had plagued the market just prior. The heavy armor is rolling back in, folks. And these institutional strikes are landing like a devastating combo attack across the entire industry. Citadel Securities just deployed a massive $400 million investment into Crypto.com, pushing the exchange's valuation to an eye-watering $20 billion to fund their derivatives expansion. Morgan Stanley's E-Trade has officially launched crypto spot trading, and Visa just dropped their Visa Stablecoin platform, an enterprise-grade system for banks to mint and manage stablecoins like USDC and USDG. Traditional finance is aggressively laying down permanent infrastructure here. Now, what's really interesting here is the sheer divergence happening in the market right now. On one side, we have smart money, aggressive, flow-driven accumulation from whales and ETFs. Contrasting that completely are the retail traders, experiencing muted participation, rock-bottom social media volume, and, as we saw, extreme fear. This rally isn't being fueled by retail FOMO. It's a highly calculated, flow-driven advance commanded by institutional conviction. Section 4. Macro Forces and Resistance Walls. Because every hero's journey has its villains, we have to talk about the invisible threat, the macroeconomic forces actively threatening to hold our protagonists back from a full-scale breakout. We're facing a ticking clock of external pressures. We started the month with Europe's MiCA regulations going into effect on July 1st, reshaping the institutional landscape. By mid-month, on July 14th, a weaker-than-expected U.S. CPI print provided a much-needed tailwind. But as of today, July 19th, geopolitical tensions between the U.S. and Iran have pushed crude oil above $80 a barrel. That reignites inflation fears and acts like a gravity well, keeping broader risk-on sentiment totally in check. Section 5. Altcoins and Regulatory Shifts. The supporting cast is stepping up too. A major piece of armor for the industry's sentiment right now is the Clarity Act, the Digital Asset Market Clarity Act. Former President Trump recently urged the Senate to pass this legislation, which aims to finally resolve the bitter regulatory turf war between the SEC and the CFTC. The market views this push for clear rules as a massive potential structural catalyst. Looking at the main supporting heroes, we see some pretty divergent paths. Ethereum is currently digesting a new lean Ethereum roadmap from Vitalik Buterin, though critics are quick to point out that it lacks immediate tokenomics reforms to fight inflation, which is keeping its price action subdued. Meanwhile, Solana is trading steadily in the 75 to 77 range, actively launching new on-chain governance tools. They're both powering up their ecosystems while waiting for Bitcoin to lead the definitive charge. Section 6. Will the wall break? This brings us to the climax of our explainer. The forces are aligned, the whales are fortified, but the macro villains are still hovering. The tension is palpable. To understand our chances, let's look at this quote. Extreme fear typically appears near local bottoms, a contrarian indicator that suggests downside risk has been partially priced in. This structural setup is exactly what you want to see before reversal. The weak hands have been flushed out, and the recent bleeding appears to be contained. That extreme fear from the beginning of our explainer, it isn't a weakness right now. It's the coiled spring of a contrarian opportunity. But before we declare victory, I have to drop this warning shot. Negative $2.91 billion. Yup. Despite the exciting $368 million in ETF inflows over the last 3 days, the 30-day net ETF outflow still sits at nearly negative $3 billion. This tells us that while the short-term tactical momentum is shifting, the broader market structure remains structurally fragile. The trend hasn't fully reversed just yet. So the crucial point is this. Bitcoin needs to execute a very specific combo to win this round. Step 1. It must hold and consolidate within this $63,000 to $65,000 base. Step 2. It's got to launch a decisive push past that $65,500 resistance wall, and it needs massive trading volume backing it up. And step 3, we need to see those spot ETFs confirm a sustained flow reversal, proving those institutional mecha corporations are actually here to stay. Which leaves us on the edge of our seats. With 270,000 bitcoins swept off the board by whales, but global inflation fears still looming over the battlefield, is this the ultimate coiled spring base-building phase before an explosive new rally? Or is it merely a fragile standoff destined to break downward? The titans are clashing, the board is set, and the next few trading days will absolutely decide the victor. Keep your eyes on the data, and we'll see you next time.